Hello friends, how are you? Vladimir here, and this is the weekly review for the first week of July 2013. First of all, I would like to start with my wishes for all the American friends for the 4th of July to come. I wish you good celebrations. I wish you to enjoy the day. And now back to Forex. Last week was a quiet week until Friday, mainly. Right? Of course, there were some moves, but on Friday we got some kick during the U.S. session, and there is a reason for that. Of course, there was end of June and position closing, and of course, profit taking. It changed some of the directions. It might give the push for other directions, and it's time to be prepared for the week coming and the month coming. So, as I said, this is the first weekly review for July. So let's take a look of about some pairs that we are following for several weeks. We're trading for several weeks. I would like to start with the dollar yen, which from my point of view is one of the most interesting. Looks like the pair is able to create here an inverted head and shoulders. I'm talking about the daily chart. Okay, again, shoulder, head, big head here, and another shoulder could be created right now. The reason I say that is we have clearly bearish hidden divergence on a daily chart, right? So that's a pretty interesting sign. Watching on a weekly chart, we can see that despite of these two huge candles, MACD slightly and almost not pushing to the upside, just flat and small push to the upside. That's pretty bearish sign. I think that as long as we are under 100, which is the shoulder level, the first resistance here level, I think as long as below this range and we are below this double spike zone, that's pretty much the same level around. Sorry, here we go, right around the 100. As long we are below this range, when I say range, I mean of course it could be 100, it could be 99, 80, that could be 120. It's all the same, right? Around the 100 level range, the dollar yen could start the drop down. As I said not once about this pair, I will not be surprised if right from here we are flying to 105 and then 110, and I will not be surprised if we will push one more time to the downside, create A, B, C, D, something like that, and of course from the top. Okay, erase that. Somewhere from here, that's what we might get, right? Of course, as I said, this is dollar yen, and all could happen as there is a massive intervention from the government. So we really have to stay tuned, and 100 zone, 100 range is something to hold. Now, watching on the 4-hour chart, there is a beautiful divergence forming right here, and that could be a trigger that we are moving to the downside. To gain stronger bearish momentum, of course, this trend line has to be broken, right? And it's very important for it to break it down, and that's of course the support zone, the previous support zone around 98. It should be broken in order for a good bearish momentum to be gained. Then we should be watching for the 3 spike zone right here around 96, a bit lower, a bit higher, sorry, right? That's the two very important levels to watch for the dollar yen. Watching here on harmonic pattern, we can see that the 4-hour charts provide an harmonic pattern as well, right? And that means pretty much the same. You see that 100 is the top of the pattern, and we can get this is pretty much the protection, and that's the targets exactly the levels we were talking about: 98 plus, 96 plus, 97 and below actually. So that's about the dollar yen. Stay tuned for every thing going around this pair. Very interesting. We have clear levels. I do think we can, first of all, as long as we are below 100, see the down move to 98, then maybe 96 if the trend line is broken, the support line is broken, 96, 97 zone. So stay tuned, that could be very interesting one. And of course the other yen pairs, euro yen still provides something that looks like a head and shoulders, even though that MACD just crossed to the upside. I will not be surprised if we will see a turnaround and a down move. Weekly chart also, we can see two candles pushing up, but MACD pushing to the downside. This is a bearish sign. For Euro Yen, from my point of view, 130.50 must hold in order for the Euro Yen to get bearish momentum. It must happen. If it's broken, most likely the bearish momentum will be forgotten. Watching here again, there's a pretty slight resistance too, so we might see the beginning of a down move here, and if this trend line will be broken to the downside, we might go all the way to see the head and shoulders fulfilled. Actually, the pound yen shows pretty much the same. I still think this is a potential head and shoulders. I can go on and on, and it looks good for each of them. For pound yen, by the way, my level to hold is 153.50. Right now it's pretty far, but this is the most important zone. And of course, to break the down to the downside, that's a pretty clear trend line here. A break below that, and we might see the visit of the next support, 147, and then if it breaks the 147, we go all the way to the downside. It could be very, very, very interesting week or months for the yen pairs. Stay tuned. Now, before I go to the majors, I want to discuss about the Australian crosses. For a while, I've been talking about them as well. As I said, we are on extreme on the Australian pairs. It's only a question of time until a huge cycle comes. Now, the thing is that last Friday, we got a sudden push to the upside, while we have a bullish hidden divergence right here. It means that the Euro Aussie could immediately turn down and push to 136, 134 immediately, or alternatively it could go for the last high or maybe even higher to create the next leg of the divergence and then to create even bigger cycle. As I said, every down opportunity will be opportunity to buy, and every new high will be opportunity to sell. This is a classical situation of buy and sell opportunities. While we have a convergence here, that's why every dip could be a great way to buy, and every new high is a great way to sell, as we are on extreme. This is extremely rare situation. That's how I think it should be treated. From my point of view, 136 was and is the target for the bearish cycle to come. It's only a question of time when it comes aggressively. And for the long up move, 150 is my target, at least 150 actually. Pound Aussie, well, pretty much the same story. We're almost on extreme. We have been on extreme during the week. It created a doji, which means a stop happening already. Watching on a daily chart, same thing exactly as with the Euro Aussie. We can see a push down immediately from here to 159, or we can alternatively see a rise again to 170 or so based on the next weekly resistance. Of course, coming closer and closer for the next extreme. Again, same story. This is a bullish convergence. This level, pay attention, still after the break, right? Was not retested after this break. I think it will. The question is if from here or bit higher and then retest. This level will be most likely retested. That's 159 zone. Right from here, I think we are going to the upside, and I do think 174 and then even 180 will be reached on during the next part of this year, maybe during the next year. Aussie Kiwi, another pair I'm following and talking about for a few weeks. Created inverted hammer there. This is normally a bullish sign, but as I said, watching on a monthly chart, it seems like we have still a bit more to go. But I remind you, the lower, the stronger the buy zone is. This is a classical weekly buy pattern, okay, for long run bullish butterfly, which means 123 zone should be reached when the cycle is ready to happen, and then maybe even 130. Alright, so the bulls are waiting for this pair. But until it happens, as I was saying not once we might reach 117, 116, even 114. Every new high is an opportunity, of course, to go for a buy. Just watch combination of weekly and daily. Daily is playing with the divergences. None of them created the important rise, so it could be double bottom, it could be bit lower with the next divergence to build itself. Watch this trend line right here. Okay, watch this one break above that, and we get the okay to go. Or alternatively, of course, buy the low with the combinations of weekly and daily candle patterns. And that's my opinion about this one. And now, time for majors, right? By the way, if talking about Australians, I'll just go back for a second. Aussie yen, as I said not once, from my point of view, is one of the best opportunities. I'm not sure this is the bottom. We could see another push to the downside. We could see 86 or so being reached. We could see maybe even lower, but there is a classical bullish hidden divergence. So from my point of view, the lower, the stronger the up move will come right after that. Weekly chart is screaming, if we get this push down, screaming at divergence. RSI could go for another low for extreme. Something huge will come. And why I think this is one of the best investment, because of the swap mainly. You could start to collect the Aussie yen, which is playing around the same zone for 2 weeks now. Start to collect, just hold it. Of course, as I said, it's able to push lower. That's why it's like an investment. Enjoy the swap on the meantime until the cycle will come. And according to the monthly chart, we have clear bullish convergence. So that's pretty much the level it's going to retest, build some bottom, and turn up most likely once again. That's about the Australian pairs. Now about the majors. Euro dollar is very tricky. From one side, it tried to push up. From other side, it finished Friday on still with a bearish candle pattern. I still think that the down move is limited here as long as this trend line holds, and this trend line should hold. It's around 129. It will complete their bend-to-bend move with a bullish hidden divergence between these two lows. That could be a nice opportunity to buy. 4-hour chart is providing a continuing divergence as well. So euro dollar down move should happen here. If it breaks this trend line in the support, that could be long-term bearish cycle. As for now, I have big doubts it's able to do so. So in my point of view, it's going to make a stop around the current range. That could be double bottom, sorry, or that could be a break and a push to the next zone around 129, complete the next divergence, and right from there, I would expect the euro dollar to push up for 200-300 points, maybe even more. Pound dollar, same story from my point of view, really great opportunity. Pound dollar has also a trend line right here, almost there. A pound dollar has several supports on the way. One of them is right here. The next one is a bit lower, and the final one, of course, is the trend line. This is 100 pips range, bullish hidden divergence forming, and the 4-hour chart has already a bullish divergence as well, continuing divergence. So I think pound dollar is able to start the up move. First target from my point of view will be this trend line, or actually the biggest trend line, okay, which is a bit smaller, okay, as a potential target, but still, this is the first one. A break above that, and we get the okay to go to the next one, which is the spike zone. Okay? A break above 153.50, okay, and 50.60, and then I will not be surprised if pound dollar will push all the way to 155.50. So first trend line, the big trend line to break, and actually the first resistance. That could be the first target. Then the second break should be above 153.50. All these levels I just mentioned, there are targets for this up move. 150. Well, this is support. 150.80 has to hold in order for the pound dollar to gain a bullish momentum. As I said, from my point of view, we are going and we are preparing the ground for a bullish move. Break below 150.80, or even I will take protection 150.50, and that would be pretty strong long-term sign. As for now, I'm doubtful we could see that, as we have band-to-band bullish hidden divergence, and actually the pound dollar is retesting, as you can see, a broken trend line through the spikes here, right? Here we go, just retesting it right now. Well, that's my opinion. It's very important to see how it's behaving around these levels. Let's continue. Euro pound. Well, I've been talking about this pair for a while. You know my opinion. I think this level, the 0.8580, must be broken. It wasn't broken for some period now. We have 1, 2, false 3, 4, 5, 6, and 7, and no break yet. If it continues to play there, all this sideway will be not relevant. If the break comes right now, that could be good sign. We are going to the upside to 0.87 or so. First of all, of course, the gap close, full gap close around 0.8650. If we go to the downside right from here, then the break to the down could and should take us to the levels I've been talking about like 2 months ago or so, between 0.83 to 0.8250. That could be and should be the final target. Then, still, I think the pound dollar will make a stop and will push to the upside for a long run again. I do think this is a classical monthly bullish flag, which should be broken to the upside at the end. This is my opinion about the euro pound. Another interesting pair is the euro against the Canadian. I've been talking about this pair also for 2 weeks. As I said, 130, the current resistance, could be nice attempt to make a sell. The next one 140 and the next one 42, as we have a weekly bearish divergence and a daily bearish divergence. According to these 20 candles, right, the lower Bollinger Band still should be tested. So it could start right from here, or it could start a push up first of all and then make much deeper move. As investment, I think this is a really nice opportunity to gain several hundred points. This is just a quick update to the trades I have been talking about already. Now I want to discuss about Australian dollar and New Zealandian dollar. These two are very, very, very interesting. Why? Australian dollar is creating an extreme. There are several supports right on the way. This was an inverted hammer. Inverted hammer on a down move many times represent a reversal to come. And we are on extreme already, as you can see. Yes, we didn't cross down. It could happen within 1 to 2 weeks. And a daily chart creating a monster divergence. We have 1, 2, 3 right now, creating a fourth low. Yes, it could continue. Yes, it could take us to 0.90. Yes, it could take us to 0.88. But we are reaching a very, very interesting bottom. And if we take a look on a short-term opportunity on the 1-hour chart, we can see that Australian dollar might be able to create a bottom right here, okay, as long as it holds above the 0.9080, and to make the push up again to 100 points up, at least maybe even 200 points, according to the 1-hour and 4-hour harmonical pattern. As I said not once, I think Australian dollar is preparing the ground for a big retrace. All these were just small stops. Yes, it could continue a bit lower, but on such extreme, on such conditions, and with all the weekly support on the way, I think it's only a question of time until it retraces. And based on monthly chart, the Bollinger Band actually brings us exactly to the same support around 0.88 and at the end. So it could be, we still could see it going, but we also can see first of all a pullback of 500-600 points, then a continuation. According to the weekly and monthly chart, it is preparing the ground for the up move. And that's exactly, by the way, what should affect the other Australian pairs. While the New Zealandian is far from extreme, but New Zealandian dollar has a monster trend line, as you can see right here. Right? A break below this trend line could provide, actually, as you can see, a break below that could provide a continuation to the downside, and then 0.74 could be the target, maybe even lower. We are now on 1 Bollinger Band application. We could go for a 2 if this monster trend line will actually be broken. So watch this very, very closely. it could be really nice opportunity for a sell if we get the break. And now it takes me to the exotic pairs. Dollar ZAR, I've been talking for a while about this pair. You know my opinion. I said not once. I think the pair is able to go back to 960, 940 zone. This is still my opinion. In case it retraces to the up again, then 1040, 1060 should be the level to watch for the next divergence and the next sell opportunity. This pair is only as investment, just to enjoy huge swap profit here and very nice potential profit at the end. And same story about the dollar against the Turkish, which did not create a classical pattern, but still providing a very nice monthly potential divergence, which could be created within 1 or 2 months. The higher we go, the stronger the sell. Dollar Turkish pays swap even better than dollar ZAR. Just hold it as an investment, because every new high, even if it's 205, will provide just very strong down move to come right after that. It's only a question of time from my point of view, and it's one of the best investments. Of course, no need to overexpose here. Just hold one position, 2 maximum with big difference between them, and let it work, let it run for a long run, enjoying the swap on this time before we start to enjoy the cycles. One of the measures I forgot is dollar against the Canadian, which from my point of view is going up. I think that as long as 104 is holding, dollar Canadian is able to take us to 106, 20, 30, then maybe 107 directly. Then I do think it's going to stop for a while, pushing back for a nice retrace, and then up again. In my point of view, 104 is critical. Dollar Canadian might make a push from here to the downside, 104.30, 104.20, maybe even 103.90. Just kind of a spike this support zone, but I still keep very bullish opinion about that. Every dip is opportunity to buy as long as 104 holds, and the protection should be below this important zone. I think 103.50 could be and should be enough, 103.40, and as I said, 106.30 first target. Then we have the 107 plus. That's the numbers I see in front of my eyes. Gold and silver. What else could we say about this beautiful commodities? I've been talking about these levels. You remember my words, 1250 or 1170, sorry. Approximately that's the levels where the gold most likely would make a stop. It created a pullback right on Friday. The biggest question, if it's only profit taking from the bears, or it's a sign that it's about to retrace. And as you can see, historically, July, on most of the cases, or end of July and then August, provide the summertime as a bullish time for gold, as you can see historically, except 2008 when we just got real crash. But as you can see, every time that for July it created some bottom, it created then during the summer a push up. You see, every time. Here was exactly the opposite. It created an up move for July, so it created exactly the opposite way. Every time it has dips before July and August, we go actually up. So I do think we are creating a bottom, and I do think that this daily candle pattern is a wonderful trigger to jump in as investment. I do not believe on daily and weekly chart trading on commodities. It could be very risky. I believe in investment zone. In my point of view, we are building a bottom, and yes, it means we still can go visit the previous bottom, or even, sorry for saying that, but maybe even 1070, 1000 maybe even. But this is the range where I think we will get the retrace, and the opposite band will be the first target of the weekly chart, of course. On silver, we got a hammer while we spiked through the monster support zone, while RSI is dancing around extreme, and while daily chart created such a powerful candle, I think it's time to invest. Yes, silver can push back to 17. Yes, it can push back to 15. It's all possible, but I do think we are in the bottoms, and within several weeks we will see bullish retraces. It could be July, August. We are building here a very big bottom, and I do think it's already a good idea to start and collect the commodities. Quick update about the indices. Well, you know my opinion about the indices. Actually, it did not change during this week. I think there is more to go to the downside for each of them, so I keep the same opinion as for now. I don't have it's probably not going to change soon, so I still keep bearish opinion. And based on the daily chart, such pattern could be the trigger to continue the downside. As I said, my opinion was and still is to the downside. I do think we have more to go down. I don't have it on this chart. I will prepare it for when I think it's a great one. But for those of you who have it, just take a look on Apple, right? Maybe just a second. Maybe I have it here. Apple. No, I don't have Apple here. Take a look on the Apple stock. It could be wonderful weekly divergence with a potential double bottom or some lower place, with a monthly band to band and monthly bullish hidden divergences forming. Apple could be. Apple was actually the trigger for the down move. It was the first to start, one of the hugest company, first to start the down move, and then indices followed that after some while. It could be the first to change the game to the upside again. I think, based on the weekly chart, that Apple is one of the greatest investment, like taking and holding these stocks. And of course, this is relevant for the stock traders of you. That's all for now, friends. Thank you very much for watching this video, but I have now a small request from you. I'm preparing some interesting project right now, and I'm going to make also daily reviews, daily trade sharing, and I'm preparing this project. It will be live soon. For that, I need to ask from you some favor. For those of you who watch me not for the first time, not for the second time, for those of you who follow me, and for those of you who enjoy this weekly review, if you can dedicate for me a few minutes of your time, please prepare some testimonial video about the weekly reviews. It's important to me. You know, every project I do, I want to take testimonials and comments only from my real followers. That's why I ask you here live, okay, during the weekly review. If you enjoy the weekly reviews, and if you find them useful, and if you think you can enjoy also the daily reviews and find them useful, then please, if you can, if not, of course, don't force yourself. Don't change your plans. But if you have some minutes to dedicate for me, please prepare a short testimonial, 1-2 minutes. Just talk about the weekly reviews, explain why and how you find them useful, what they mean for you, and what they give for you. Right? It's very important to me. And if you can do that, please email me then to vladimir.ribakov@gmail.com. This is my email, right? Email me directly, of course. And once again, thank you very much for watching this video. Thanks for those of you who are going to help and dedicate the time. Really appreciate it. Thanks in advance. I wish you a wonderful week and happy trading. Yours, Vladimir Ribakov.